Hello, good morning, and welcome everyone to EQ Markets Global YouTube channel. This is 𝗦𝗛𝗔𝗥𝗘, Head Market Analyst, Head of Education for EQ Markets Global. And I'm super delighted to have you one more time on the weekly market outlook. This is where we share in-depth analysis and in-depth insights into the economic happenings of the week and how it's going to affect our trading, or rather, how it's going to also affect the pairs or the assets that we wish to trade. And more so, we also look at high probable setups on different assets that we would be taking advantage of. Simply follow me. If you're new to this YouTube channel, please do well to leave a thumbs up for this video, share this video to a friend or your community, and also subscribe, turn the notification bell to all so you get notified every single time we drop important and educative content just like this one. So let's go quickly to look at the economic calendar for this week. For this week, we pretty don't have so much that is going to be happening, except for these few high impact news that we are expecting. All right. So already on Monday, we have by 6 p.m., the governor of the Bank of England will be giving a speech. All right, and that's going to be affecting the GBP as well. He'll be giving a speech by tomorrow morning Nigerian time, 9:45 a.m. Nigerian time. All right, so Governor Bailey's will be giving a speech 6 p.m. on Monday and 9:45 a.m. on Tuesday. All right, so being that he is the most sensitive person when it comes to the fluctuations and movement of the prices of GBP in the market, we also need to look out for that speech, okay? And that's why it's important, and that's why it's also tagged high impact expected news. And then by 3 p.m. on Tuesday, we will be expecting the consumer confidence that data that will be released. Or say, okay, so let's also look out for this one. That will be affecting the USD and 3 p.m. Nigerian time on Tuesday, March 28th. And of course, we're expecting just one CPI data for this week, and that's going to be for the Aussie, right? That's going to be by 1:30 a.m. on Wednesday. Okay. Of course, we're expecting that CPI data, and it's a CPI year on year. All right. And then we'll be expecting the GDP quarter on quarter for USD by 1:30 p.m. on Thursday, and also unemployment claims. All right. Last month, we saw the unemployment claims data report was around 191,000, right? And of course, we're expecting about 195,000 people claiming they are unemployed in the US. Of course, if this happens, all right, it's not going to affect the dollar that much. But of course, we have to still consider it as an high impact news. But of course, if the data are far above 191, if we should see around 200 to 210,000 or 220,000 and above people claiming they're unemployed, that's drastically going to affect the dollar. All right. Don't forget the dollar is actually strengthened since after the last NFP. Right. Dollar has been strengthened. Of course, if we see data is around above 200,000 people claiming they're unemployed in the US, it simply means it's going to somehow cause a temporal bearish movement for the dollar index, right? So just to put that in mind. And then also going forward, on Friday, we have the GDP month on month for the Canadian dollar and also the core PCE for the USD, all happening at 1:30 p.m. Nigerian time. So these are the news, high impact expected news that we will be getting to see this week for the last week of March, the last trading week of March, actually. All right. So let's quickly look at the dollar index so that we can also know where the dollar is going. And of course, we will be able to plan our trades, especially the dollar paired trades, very well. So for the dollar index, we see that that break of structure here, and of course, confirming that this is a downward trend. But we can see this minor counter trend line that is also moving. We've had the first touch, we've had the second touch, and it's, of course, we have a sweet rejection candle on the counter trend line, confirming that yes, this is going bullish. Of course, if this continues to go bullish, then where we expect the dollar to get to is somewhere around 103.998, right? If that zone is broken, then let's see the areas of 105.5 to 106. right? And from that level, doing this trend line, we will see a fall back into this level at around 101.0. So this is the movement we're expecting on the dollar. So for this week and perhaps the weeks to come, a week or two more weeks to come, we might probably see the dollar consolidating, but rather moving upward as well, even amidst the consolidations. All right. So if we're expecting a stronger dollar for this week, it simply means that some of the currency pairs that we will be trading will also be greatly affected. And I'll show you that very shortly. All right. So for the strength of the currencies that we'll be looking out for this week, the USD and the JPY are currently the strongest pairs that we would most likely be looking out to trade. Right. So we have, sorry about that. So we have the USD being the strongest pair, okay, and we have the JPY as well being the strongest pair. Also, we can find some form of strength in the Canadian dollar, all right? Let me use red to mark out the weakest. The weakest for this week so far is the Aussie, the Euro, okay, and as well the NZD. So as always, you may most likely want to find opportunities for a trending market to trade, right? So finding opportunities in a trending market will most likely be pairing the weakest against the strongest, and that would be pairing USD against NZD or pairing Euro against the dollar, the Euro. I'm sorry, pairing USD against the Euro, that would be Euro USD and also AUD USD. You might also want to maybe pair things like the Euro card, or we will most likely want to pair things like the NZD card. All right, so by the currency strength meter, those are the trending pairs that we may want to be looking out for this week. All right, so if, like I said, you are new to this channel, you can kindly hit the subscribe bell icon, turn on the notification bell, put it at all so you get notified every single time we drop informative, educative, and powerful content. This is just one out of the menu that we drop on our YouTube channel, right? And also do well to give this video a thumbs up so that I know that this video is making sense to you. Drop your comments and suggestions, ask your questions as well in the comment section, and I promise to check out for them, look out for them, and also answer your questions. And also appreciate you for your kind words and gestures on this video. And also, you may want to stay up to date and follow us on all our social media channels. We're on Facebook, we're on Twitter, we're on LinkedIn, we're on Instagram, and also on TikTok. You can find us everywhere as EQ Markets Global. Let's quickly run into the pairs and what we want to be trading for this week, okay? We're going to start out with the Euro USD. I'll just take a few pairs and, of course, we will be fine with it. All right, so the Euro USD, of course, enjoyed a massive bearish rally until this break of structure and the retest that rebounded, right? But then this is a very significant level here, right? Somewhere around this level is somewhere around 1.11115, all right? So 1.115 is a very significant level for Euro USD that we're expecting that it's definitely going to retest, right? So after the break here, it has retested once, and of course, and obviously, it's going to retest that same level, 1.115. It's currently trading around 1.07764, right? But then, irrespective of this minus short, all right, or a minor sell-off, we're expecting that the major point where Euro USD is going, it's this level at 1.115 thereabout, right? 1.115 thereabout is where it is coming into. So let's quickly talk about the minor shorts that we can see here, right? We said dollar is being strengthened this week, right? So for as long as the dollar strengthened, we're going to see Euro USD fall because the dollar is a good currency on the pair, okay? And that, of course, that's why we see the little sell-off that we're experiencing on the dollar on Euro USD at the moment. So my bias is this, all right? Just a second. My bias is I see Euro USD falling down to this level, right? If it breaks this trend line drawn here, then it's definitely coming into this trend line, right? Which is somewhere around 1.05531. And of course, from this level, we will see the highs of 1.1155 that we've been looking at. Okay, so but then the strengthening dollar will cause this short to happen, right? Fall down to this level or fall down to 1.05531. And of course, from there, we would see a continuous bullish movement play out on Euro USD, right? I believe I believe that is sorry about that. I believe that makes sense, right? So first the sell-off because of the strengthening dollar, and then back up until we test 1.11546 or 55 thereabout. And as well for the GBP USD, it's no different, okay, from what we've just seen happen on the Euro USD. Because of the strengthening dollar, we might also most likely see a sell-off. But of course, you know, the Euro is weak at the moment, but GBP is not weak, right? And that's why we don't see a massive sell-off here at the time. All right, but then notwithstanding, we would also see a sell-off because already on the daily time frame, we're seeing a bearish pressure setting in, right? We're seeing a bearish pressure by way of our commodity channel index, which tells us the momentum in the market. We're seeing a bearish pressure setting in. So most likely, we would also see some form of minor sell-off, all right? And then before it continues to go off. All right, so if I would want to give you the exact points that I expect these sell-offs to come into, it will be somewhere around this level here, 1.20322. All right, 1.20322 is where I expect the sell-offs to come into. But of course, well below that level, if this area is cleared out, then we would most likely see GBP USD fall back into 1.18884. Right, of course, that's where we have a very strong support level, all right, 1.18884. Okay, but then let's look out for 1.20322 first. And from that level, we'll come back to test 1.25919, all right? So this is the actual destination, but these are just moves, repulsive moves and corrective moves that are happening in the market, okay? Then let's quickly look at gold. I like us to take gold from the monthly time frame so that we better understand what is happening on gold, right? So yes, gold is still enjoying a bullish ride, whether or not we like it, right? Gold is still bullish bias on the monthly time frame, right? But some key and significant levels that we need to watch out for is first this level 2064, and after 2064 is 2014. After 2014, 1931 and 1901. Now, I'll tell you about the 1931 and 1901 when we scale down to a lower time frame, because of course, you're not going to appreciate those levels on the monthly time frame. So on the monthly time frames, the level you're going to be really appreciating is 2064 and 2014. Why 2064? That's because, okay, so just, pardon me to, okay. All right, so just a second. Pardon me to take this off. Yep. So why 2064? That's because 2064 had been tested twice. All right, if you notice that carefully, 2064 had been tested as far back as August in 2020. And then again, it tested that same zone, March 2022. Of course, we'll be expecting the coming months that prices will get back to that same high, right, that it has tested previously, right? Obviously, if this happens, then we will be finding a triple top somewhere around this level, okay? So prices coming back to test this level will make a triple top, and then we would see continuous bearish movement, perhaps on gold. But I'm very sure, okay, rather, I would say that based on what I am seeing here, I am more biased for more bullish run on gold in the coming weeks and in the coming days, right? But let's look at it on the let's look at it on the short term and what is going to happen, right? So remember, I made mention of 2 points, 2064 and 2014. 2014 is an area that has been tested on countless occasions as well. So let me show you that same level, 2014. So if you watch 2014, it has been tested here sometime in 2020, and again, it is being tested just last week, okay? So it simply means that testing this zone, price is just respecting that zone, right? And then we see the sell-off. Let's go over back to the daily time frame. Of course, that's where the old chart begins to make more sense to us. Okay, so even though we see a little corrections, of course, we see that gold is riding in a trend line channel on the daily time frame, and of course, is obeying the trend line channel 𝗟𝗚𝗘. Okay, so we see that where it broke into the channel and then rebounded at 1615, all right, on the channel, and then it came again testing this zone here, came back testing the channel again. Now, of course, it will interest you to know that if it's going to ever test the upper band of this channel again, then it's going to do something like this and back up. And that's where it comes into 2064 or slightly above it, okay? That's where it comes into 2064 or just slightly above it. So it's either it comes back to retest here and then begins to fall off, or it comes back to retest here and begins to fall off. But whatever case it is, it's obeying the trend line channel, and 2064 is still very much in view for gold, right? So this sell-off that it's selling off, it's because of the corrective moves that it is having based on the resistance that we found at 2014, right? So where is it going to sell off to? It's going to sell off to around 1931, which is actually a weak support zone, right? So I have to spell that out to us. It's actually a weak support zone that we're finding at around 1931, all right? So I'm expecting that this zone is going to hold, but not strongly expecting that zone to hold. It's probably going to break that zone and come into 1901, right? So those are the two zones I said would make sense if we scale down to the lower time frame. So why 1901? Because this was acting here basically as a support before the break, and then of course we can see some form of consolidation, minor consolidations here as well. And then also still at 1901 here, we can see the massive consolidation here. Then it acted as a support and then consolidations again before it broke. So it simply means that zone is a respected zone and will still be respected if prices get to that zone. So yes, of course, for me and my bias, all right, I'm expecting prices to come into the zone and well below that zone. If it is cleared out, prices coming into 1901 and then going back up into 2064 or slightly above 2064. All right, so that's what I'm expecting to play out on gold for the week ahead. Right, so for the week ahead, let's still be watching out for 1931 and 1901. All right, so let's quickly look at USD/JPY. So USD/JPY is now finally enjoying a massive bullish retracement. But yes, I call it a bullish retracement because the trend is a sell. Okay, this is a sell trend that we are clearly seeing on USD/JPY. Should, in case you want to know more about it, let me show you on the monthly time frame. It's actually obeying a trend line channel as well. A break into the trend line channel, and of course we found the retest and then rebounded here, came again. This was a very significant resistant area, if you notice, right? If you notice carefully, this was a significant resistant area. So of course, it had to obey and came back to the trend line, and then it broke through that trend line. So of course, we're expecting prices to come back into 124.8, all right? Around 124.8 to 125. That's what we're expecting prices to come back into, right? The best it has done is 127, but we're expecting prices to come back to at least 125, right? That's on the monthly time frame. And then the pressure on the monthly time frame is still sell, okay? So we're just experiencing some form of bullish retracement only on USD/JPY. So where is this bullish retracement going to end, right? Because of course, it's definitely going to end and prices will go where it's ought to go, right? So the area where we're looking at that this bullish retracement will come to an end is here, all right? This zone here, all right? So we're expecting prices to come back into 132.8, and then of course from 132.8, if it is not cleared out, then we will continue to see a bearish run on USD/JPY. So enjoy the bullish run while it lasts, enjoy the bullish retracement while it lasts, and then also enjoy the bearish retracement at around 132.8. And then for US oil, of course, we're seeing a rebound on this major support level, right, which it fell down to at around $64 per barrel, all right? But of course, the overall sentiment on US oil is a sell. Of course, we've had a trend line drawn, and it has had the first touch and the second touch. We're expecting the third touch, but until that happens, all right, we'll be having some ups and downs. Yes, we know. All right, so we had this minor counter trend line that was drawn here after the first touch and the second touch and the third. Then we had a break, and then it came back to take solace somewhere around $64 per barrel, where we have the strong support level. So my bias is this, that US oil will rally back up into this trend line, right, around 75.65 or $76 per barrel before it's going to come back into the zone around $64 per barrel, right? So we might most likely want to look out for opportunities for a buy up onto these $75 per barrel, and then we find another opportunities to take it down to $64 to $62 per barrel. All right, that's my take on that. All right, so I actually mapped out 81.96 as well, should in case 75.6 or $76 per barrel is effectively cleared out. So of course, if prices break above this support line, right, we would see prices come back into this other trend line that is a resistance at 81.96. So we've had the first and the second touch. So if prices breaks this minor counter trend line, let's expect prices to come back into this trend line, and that would be around $81.9 per barrel, right? So that's for US oil. Let's quickly look at the NASDAQ 100 as well. The NASDAQ 100 already, we can say it's still a bearish movement. Of course, the bearish reign is over. We see that break of structure and then a retest on the major support level up until when it gets to this point. Around this level, 12893.18, where currently prices is going close to, is a major resistance level as well. So we're looking at these on the weekly time frame. Let's look at it on the daily time frame so that we can establish the fact that it's a major support level, right? So if you look at it closely, here it was a support, right? I don't want to go into more price data, and of course here it was a support before the breakout, so we see the consolidation, right? And here it became, after the breakout, it became a resistance, and then even after it broke through, right, it became a support here and a resistance. So this zone is actually very significant. And so prices coming into this zone, we will be expecting or looking out for what? A sell. Maybe a sell back into this trend line that we've been able to establish before it goes back up. But of course, let's also know that as much as we're expecting this zone to be respected again, it has been tested that zone multiple times. So of course, that zone might now be weak, okay? So let's expect as well, on the worst case scenario, prices breaking out from that zone, right? Let's expect that prices will break out from this zone, come back to retest, all right, and continue to go up. This is also another possibility. I know you never saw that, right? So let me take that again. There are two possibilities to what is going to happen on the NASDAQ 100, right? If this zone is respected, prices will come into this trend line here and then rebound from that trend line and begin to go up, right? That's the first scenario, okay? But look at the second scenario now. The second scenario is that prices will effectively break this zone and then will respect this area here. If you can watch it, right? It will respect that area there and then come back to retest the same area that was once a resistance before it begins to go up, right? So that's also a very, very, very important thing that we need to look out for. So whatever is the case that happens, all right, I need you to be aware so that you don't get trapped, all right? I need you to be aware. Whatever thing that is playing out, we already have it, the information firsthand, right? And then I'll also look at AUD/JPY, which is also not too far from USD/JPY. It's also going to be enjoying a bullish retracement before the bearish retracement is going to continue. But this is quite a bit different from what we saw on the USD/JPY, okay? So let's first of all establish a trend line, right? This is a trend line that we can establish on AUD/JPY, right? But then we found major supports here, right? So actually last week, I was expecting that support to play out somewhere around this level, right? But then, of course, prices respected that zone just a bit and broke through that zone and then came back to retest this level here at $86 per barrel, okay? That level, it was respected. It's $86 per barrel was respected because, of course, looking at past data, that was also another resistance zone that we need to take note of, right? And we see how prices were sharply rejected from that zone, of course, with a rejection candle even on the daily time frame. And of course, we see prices keep going up. So we're expecting prices to rally back up, let's say into the zone $88 per $88.436. Rather, that's not going to be a per barrel. Sorry, this is not US oil. This is AUD/JPY. So that's 88.436 price level. And of course, from that price level, if it's not effectively cleared out, we would see a sell off back into 86.107. Right. So just to take that in note. Of course, but if that level is effectively cleared out, then we'll be seeing prices coming to 90.466 before the sell-off will continue. All right. So this is a much I can take for this week. All right. Do well to leave a comment for me in the comment section. Let me know your thoughts around some of the pairs that I've analyzed or even the pairs that I've not analyzed. Let me know your thoughts and I'll be super glad to reach out to you or reply your messages. And also don't forget, give a thumbs up, like this video, and also share it to your friends, your colleagues, and everyone that you think this video will be helpful. And don't also forget to subscribe to this YouTube channel. Bye for now and see you next week, Monday.